episodic you were on. Seems like you were on in the last couple of weeks or so, and I think you're somewhat defensive, but we can't just bury our head in the sand, can we? What are you doing?
Yeah, well, I mean, I think you do have to be sort of defensive in this environment. We're going to continue to see whiplash. But the things that we're hearing right now, not only from companies, but from the economic data, is that it's finally all catching up with what the market had told us was going to happen. So we're seeing a lot of these indicators roll over. We're finally hearing from companies that earnings may not be as strong for the rest of the year as we originally thought. And all of that needed to happen in order to fight public enemy number one, which is inflation. And I think as investors for the next 60 days or so, as a lot of this data rolls in, we're going to continue to see bumps. And it's okay to sort of sit on the sidelines with your money, but you also have to be prepared that the second half could be a lot better than the first half once we get past some of these big data releases.
Will, we've had a discussion, and we separated core inflation from food and energy, and it highlights the conundrum, really, that the Fed has, because it's hard to control food and energy inflation, and we don't know how long the war is going to last. There's a lot that we can't anticipate, that the Fed really doesn't have tools to address. What do you think? Is inflation rolling over, or is it going to be persistent for years?
I think at this point, inflation is leveling off. I'm comfortable saying that I think the highest level is behind us, but that doesn't mean that it's just rolling off a cliff and it's going to fall down to comfortable levels by the end of the year. Look, we're going to get a summary of economic projections from the Fed at this next meeting. I would expect that their projection of PCE is going to rise, particularly for 2023, and we're going to be able to set better expectations about how they might fight that. To your point about core inflation versus food and energy, the thing about food and energy is that they're not optional items for consumers. So there isn't a substitute. We still have to spend money on that. And that's what's affecting consumer behavior right now. And consumers can change their mind on a dime about how they're going to spend their money going forward. Businesses can't do that. That's why we're seeing some of these problems with inventory and a lot of businesses trying to catch up with how consumers have changed their behavior.
So what do we get? A kind of an uncomfortable amount of stagflation? We did see, the World Bank and, different global entities talking about a lot of countries are at risk of a sharp slowdown based on what's happening. Is the world going to go into a slow growth period with persistent inflation? Because that's not good.
Right. Well, I think that is going to be the case for a number of months here. But one of the things that we're seeing, an indicator that I had been sort of waiting for to roll over was the housing market. Okay. And we're finally seeing that happen, too. You saw mortgage applications fall again today. The last piece of that market that needs to fall is home prices. That happens with a lag, but that's a really big ingredient to show us that inflation has actually gotten to its highest level and is coming down.